Hi, everyone. Welcome to the 142nd episode of the Timing Research Show for June 19th, 2017. My name is David Cosmeter. I'm the creator of Timing Research, and today we will be talking about the 195th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com, and you can download this or any past report there. I have Dean Jenkins back to host today, so I'm going to go ahead and turn it over to him.
All right. Well, David, thanks for having me back again. I always enjoy this show. I look forward to this. It's a good format, and you managed to gather up some pretty smart, well-informed panelists. So I learn something every time I'm here. So thanks again for having me here. Thanks for the panelists and for the attendees for watching. And let's see what kind of opinions and facts we were able to bring out here for the market. And the 195th report, you're closing in on 200 pretty fast here, David.
Yeah,
almost doing things special for the bicentennial report.
I'm thinking about it. If anyone watching has any ideas, feel free to email me.
Yeah, definitely fireworks, right? All right. Well, let's start off by having the panelists introduce themselves. We'll just jump right into it. If you just take just a real short introduction, your name, your company, the service that you're providing, just a little bit about you, what you're doing, just a real quick, maybe 30-second introduction. And we'll kick it off with a veteran of the show, Larry Gaines of PowerCycleTrading.com. Larry, tell us about yourself.
Thanks a lot, Dean. Good seeing you, and thanks, David, for having me here again. Yeah, so Larry Gaines, and I'm got a site called PowerCycleTrading.com, and it's an educational site for basically I teach people to trade directionally using options. So I've been professionally trading for over 30 years, and previously ran a very, very large oil trading company, trading desk, international trading desk for a long time, over 10 years. So a lot of background in trading, just commodities and just trading in general. So my passion is options, and then I've developed a lot of different directional trading models that we incorporate for our trading, and then we use options for primarily the trades. So that's what I'm all about, and hopefully you'll visit my site, PowerCycleTrading.com, and thanks again for having me here.
All right. Thanks, Larry, for being here. And then next up, we got options covered in real strength today because we got Jim Kenney of Option Professor. So Jim, if you would give a quick intro.
Well, I am the content provider at OptionProfessor.com, and basically we've got 7 option learning DVDs that go over all the different strategies, the uses and the risks, both from the buy side and the sell side, so that the individual investor has a better idea on how these options work and how these strategies work. And basically whether they're looking for cash flow creating strategies like covered call writing, or hedging strategies like collars, or two-sided strategies like the strangle or the straddle, and how they work and all the different ways of trying to apply them. There's value in the DVDs, and we've been doing this for a very, very long time.
All right, Jim. And I know I've been on the show here with you before, so it's good to be back with you.
Sure. Nice to see you.
And then we've got someone here for the first time, Ron Haydt of Financial.com. So I look forward to meeting you and hearing what you got to say, Ron. But go ahead and introduce yourself.
Hey, Dean, thanks so much for having me. And David, thanks for bringing me on as well. Yeah, it's great to be here. I am from Financial.com. It's a new website that we've just created, and we launched it back at the end of last year in December. And, about myself, I've been in the market since 2000. It was a very interesting journey, which I'll share for, another time, but never thought I'd be in the stock market. We ended up getting involved and then trying to create tools and value for people, for traders, to make their life easier. And that's where Financial came from. And we'll talk about this later, but it incorporates seasonality, proprietary stock score, where you can get clear buy and sell signals. But what's really cool about that is it's based off of technical, fundamental, sentiment-based data, and then also overlays with some seasonality. So it's really exciting. And I love what I do, which is why we're all here today. I love helping folks try to, improve their results and making a positive difference so they can take control of their own money and, and do better for themselves. So thanks again for having me on.
Yeah, great to have you here. Again, I look forward to hearing what you have to say as we get into the questions and the discussion and the show. Well, I'm Dean Jenkins, founder of FollowMeTrades.com, and I'm a trader. That's first and foremost, I'm a trader, and I've been trading for over 20 years, in my own account. Probably the last 6-7 years, I switched from being a fundamental guy. I went to business school, and they beat into us how to analyze, earnings statements and financial statements and all this kind of stuff, and did that for years. Did okay up and down, but it was never, it was so frustrating when you have a good company with good products with good earnings and the stock would go down. I go, what else is going on here? And I got exposed to technical trading, and now I'm a 100% technical trader. I think all the fundamental data matters, but what's the reality is how all the participants are responding to the data, and that's the ultimate reality, and that's really all we have to look at is what the market's doing with the data. So I offer a trading service, a stock and options advisory service, and I have some training to teach the method that I've used, and it's been pretty successful for me. And then I have a live trading room in the mornings, about an hour and a half, right at the open. So again, Dean Jenkins, FollowMeTrades.com, and I just enjoy this show. It's always good to hear different opinions. So we're going to go through a series of questions and ask about people's take, what they think is going to happen in the market, and then ask them to justify their reasons, what they think is going to happen. And hopefully we have some, it's always good and interesting when we have some agreeable disagreement, right? Some different opinions here, and just, for the audience to get some different perspective. So David's forecast, the survey called for the market going higher, the respondents to the survey, and using David's secret and complex algorithms and how he interprets that data, he gives it a 52% chance of the market going lower from Monday's open until Friday's close. If today's price action is any indication, the survey is going to be right, but this is only one day, so we've got a lot of week left before us. So we're going to jump into question number 1, and that's for each of the panelists to just give a prediction. You think the S&P 500 will close lower from Monday's open till Friday's close? Will it be lower or will it be higher? And what's your percent confidence? So that's question 1. We'll come back in question 2 and we'll ask you why. And at that time, you can share a chart or whatever data you would like to support that position. But let's go around the table first and just say lower or higher, and what's your confidence rating on that number? And we'll keep this order. So Larry, you're first up at bat.
Yes, I'm going to say higher, and I'm going to give it about a 55%. If it had been coming from a lower base like Friday's close, I would give it a much higher percentage. But we'll come back to that. So higher.
All right. So first up, higher, 55%. All right, Jim, what do you got? What do you think we're going to do here?
I'm thinking 2460 is as good as it gets, and I think by Friday it rolls over. And my confidence level.
Lower?
Yeah, I'm saying lower by the end of the week. Not from right to here, but maybe a little bit higher, and then by the end of the week, rolling over a bit. Confidence level on that, though, is going to be in the 40% area.
40%. Okay. So less than half. Okay.
Well, I think we're very high.
All right.
So obviously, it could keep going, blowing out, but I'm just thinking there could be some resistance off of that 2460 number. And if there is, then obviously that confidence level would grow.
Okay. So if you're 40% confident in your, does that mean you're 60% sure that you're wrong?
I would say I would say that I'm 60% sure that this is an area where it could be binary. It could be a situation where it's going to be very, very up or down by Friday. But there's a couple of things I'll talk about in a little bit that makes me feel like it's possible to roll over a little bit by the end of the week.
Okay. I'm just having fun with you.
Yeah, no. If it was
So,
an exact
Ron,
science, it would be no trouble, right?
yeah, they wouldn't call it trading; they would call it printing,
Right.
right?
Right.
So, Ron, what do you think? Higher or lower by the end of the week, and what's your confidence level?
Hey, thanks, Dean. Yeah, it's just funny. Walking into this week was bullish, and now we had the markets up so much already this morning. But between now and Friday, I'm still bullish, and it's amazing. The market just shakes everything off. So, I'll go as high as, say, 2/3, 1/3. So I'll go 66% will be my magic number, but higher by the end of the week.
Okay, good. Well, we got one outlier. That's good. That's good. So I'm a very I'm reluctantly saying higher, just based on the technicals. Again, I'm a technical trader, and we're in an uptrend, and it's uninterrupted, and it's still going. And like Ron said, it shakes everything off, right? And I'm waiting and looking for the signs for a major market correction, but they're not yet there yet. And I just got to trade the realities that are in front of us right now. So reluctantly, I'm going to say the market looks like it's going to go higher, and I'll give that a 51%. I think there could be some precipitating event that could come, and I think there's enough. Just everybody's like us going. It's going higher. I have no idea why. There's a bunch of reasons why it should be going down, and I think any kind of precipitating event could trigger a pretty good sell-off. But I got to go with that for now. 51% higher. All right. Well, good. So at least we didn't get 100% all one direction, right? We do have Jim Kenney taking the alternate position. That's good. All right. So let's go back around the table now, and you can dig in and take a few minutes and give some, give your thoughts. And if you want to show a chart, any kind of analysis, whatever you want to share, that would be great to talk about why you think it's going the direction it is, what's giving you the confidence or lack of confidence. So, Larry, you are up, and I see your chart.
Yeah, so the reason I say up is just basically what you were saying, Dean. We're in a trend to the upside. We're in a long-term trend. So if you look back here, we'll take a weekly. I like to look at weekly and define that as kind of your long-term trend. So if you just look at the weekly, we've been just a sweet, beautiful trend up, holding the moving averages. And then if you come back down and you go down to the next time frame, the daily, which I kind of refer to as medium-term time frame, we had a pullback in here to the moving averages. So I call that a moving average retracement, held nicely here, and now it's plugging back to the upside. Now, the reason I gave it 55% was because the question was, from today's open, will it be higher or lower? So if we had come in from today being where it was Friday, I would have been very, very high on my probability, like probably 80%. Holding this, it would be higher. But coming in with the gap up of 9-10 points based on this opening low here at 24.42, that's why I gave a lower percentage. But I think, just like you said, it shakes everything off. We've got all the FANG stocks back up. And now we've got these Fibonacci levels that look like they're in play. We just broke a new high, 24.46. Next level, 24.54, then 24.64 up here. So, I like it. Apple's, showing some stability. The FANG stocks are up. So we shall see. But that's based on my analysis here. So up.
All right. Good. Yeah, I like that, the FANG stocks, right? And I'll talk more when it's my turn, but like I mentioned, there could be a fairly small precipitating event that could cause a sell-off, like we saw in tech, right? Not too long ago, just a handful of days ago, right? And that could happen on the broad indexes too. Mm-hmm. All right, Jim.
Yeah,
Jim Kenney, you got a forecast down. What do you got?
Well, what I got is obviously my opinion is that on the macro, everything is very, very favorable for more upside. So that's why this idea that it might roll over by the end of the week is a big might. So, we've got deregulation with the Volcker rule, the Dodd-Frank Consumer Protection Agency, and we've got the financials with a huge tide underneath it. They were talking about changes to the leverage loans, which would make LBOs a lot easier to finance, and it could free up $2 trillion on banks' balance sheets to use. And then, of course, you've got the tax reform out there, a tsunami of activity, repatriation money. So stepping in front of this, and of course, if they get tax reform, some people are saying that the market will start discounting 2018 earnings, which are supposed to jump about 10%. So, nobody wants to step in front of this, and nobody really wants to do it, I don't think, before the end of the month. When they'd have to go back to their bosses and say, what do you have on your books? There's going to be obviously some window dressing to show that you're long this market. So why would I even say that it might roll over, right? Well, the number of reasons are technical in nature, and that's why it's such not such a strong call. The moving averages we know are way underneath the market. We saw the FANG stocks had the same scenario where their moving averages in Amazon was down in the low 800s. We were way above 1,000, and you saw what kind of a pullback that had for a very short period of time. So the moving averages, there's a gap now that they've created. The VIX, for the last 10 or 15 years, it's been under 10 about 11 times. In the last month, it's been under 10 about 7 or 8 times. That's an awful lot of complacency up here. And then, of course, at the end of the quarter, we're going to maybe not have the support of the window dressing. So, and then Dean, I think you're more, and I heard the other gentleman talk about the Fibonacci, but I had heard someone say that between 2450 and 2460, there were some Fibonacci numbers that they thought were a target. So if you wrap all this stuff up into a package, I'm thinking that 2460 might be as good as it gets, and maybe by the end of the week, some people might want to take something off the table for a reason unknown to us right now. I was seeing.
All right. Very good. Well, Ron, you said 66% higher, 2/3 confidence higher. So convince us of that. Build a case for it. If you want to show any charts or data, this is the time to do it.
Okay, yeah, thanks so much, Dean. I'm, when I'm listening to Larry and talking about the moving, I use something similar as well. And when the queues load up here, we'll take a look at them in the spiders, but here the queues are now using Thinkorswim. So I just, the market does, it's very resilient. It's amazing since the November turnaround with the election. And no matter what seems to come out, if you look here on the queues, it's a one-day close, even at the lows of the day, a one-day down, lows of the day, but there's zero follow-through. And even here recently with the queues, if you can see my screen, big down day, but then for the next 5 trading days, they just cannot, the bears,
or is it Ron's connection that's having trouble here?
Let's see here. You guys should be able to hear and see me. Yeah, it says I'm screen sharing and I'm live. Can you see my screen?
Yeah.
Okay, perfect. Did you hear everything I just said, or do I have to start over?
It was breaking up for me. Is everybody else hear him okay?
I'm hearing him fine.
Okay, it's me. Just press on. Ignore me, man.
Oh, sure. Yeah, no worries. So, but my point is even when we get the big down day in the NASDAQ, there's just no bite. The bears will make it a little scary, but there's still coming off the lows. And today we have a gap and a close. If we get over the high of the day from 614, in my opinion, that puts the previous highs right back on the table. So even when they try to sell the FANG stocks, Facebook, Apple, Netflix, Google, Amazon, Nvidia, the FANG stocks or whatever you want to call it, they just can't do it. And then if you go back to the spiders, above all moving averages. Now I use the blue line as the 5-day EMA, the red's the 20-day EMA. Those are my short term. Then you have the 50 and the 200 below, and we just keep going. The diamonds, for a while the diamonds weren't doing as well, and now the diamonds are the ones breaking out while the Qs aren't doing well. So the money just doesn't seem to leave. So it's what keeps me bullish not only this week, but even if we get something bad, what I'm going to look for to show that the bears might actually have a chance, it's like, let's actually crack a major moving average like a 50-day. And maybe then the bears actually get an ounce of credibility. So that's where I sit.
All right. Well, thank you. So I'll go ahead and show a chart now. Let me get this right. Okay, hopefully you can see my chart. This is the E-mini S&P 500 futures contract on a 60-minute chart. And let me just, yeah. All right, can you guys see my chart okay?
Yes.
Yeah, I can see. Looks good.
Okay. I was just having a couple little network drops, and I was, uh-oh, am I all by myself here? So what we got here on the S&P 500 is a very simple form of Elliott wave, and we're in an impulsive move, right? This is all a wave 3. Right? That's the problem. We got the price oscillator, the momentum oscillator, and we can see growing momentum. And I also use Dow theory just a little bit to, to tell me when, when has a trend changed, right? Dow theory tells us we've got an intact trend if we've got higher highs, higher lows, higher highs. We're putting in new highs. So, the trend hasn't turned and started down until we start putting in lower high, new lows. A couple sequences of that gives us pretty concrete evidence that the trend would turn. And right now we're just putting in higher highs, higher lows, higher highs. I like the 60-minute for the weekly trend, and it's heading up and growing in momentum. So you just can't argue with that. And so that's why I kind of reluctantly say that I think it's going higher. I've got a line here, and I'll put another one. The other thing that convinces me is there was a really pretty wide channel that we were in, and I'll just give this a little more weight so we can see it. Right, since beginning of June, we were in a pretty wide channel. The S&P swinging back and forth, not really making new highs or new lows, and we just broke that this morning. So in addition to higher highs, higher lows, higher highs, we've broken out of a sideways channel, and that's a bullish sign, and can't argue with it. So, I'm looking at an 8-year bull market that's losing momentum, and I know history tells us at some point it's going to correct, but there aren't signs of it yet. So we got to go with the trend, and I'm long. About half my positions are long, participating in this trend, and there's some sectors that are heading down too that we're doing pretty well in. So that's it. I wish, see bearish signs and could get more excited about going short with, the idea of a coming correction at some point. But several of the panelists made other points about some reasons why, some fundamental reasons why there may be a real bullish case for the market. So we'll just trade the realities, use risk control, risk management, and go with it for now. Well, good. Thanks everybody for for your opinion and for your ideas and thoughts on the market direction and what's going on. The next question we have coming up here is on Amazon. So Amazon agreed to, or announce that they're going to acquire Whole Foods, and the question is, each of the panelists, what do you think that does to the the long-term outlook for Amazon? Does that help? Does that help Amazon as an investment? Does that get your interest, or do you think it hurts their long-term chances? And Larry, we'll have you kick that discussion off.
Yeah, I think it's pretty exciting. I think it's a fantastic acquisition for Amazon. First off, it's hard to compete with Amazon, period. But now they've got a fantastic entry point into the food market, which is such a huge market for them, period, to penetrate, which they've been trying to do. But this one gives them an instant platform with fantastic, really high-end locations, established already a great brand name. So I think it's a fantastic acquisition for them. I think it just makes them a much healthier and robust company, and I think they'll do just like what they've done in all the other sectors they get into. They'll end up dominating it, and they almost, you look at the price spike that they had on Friday. That's that kind of spike. Usually it goes the other way when you merge or acquire a company, but that almost probably paid for the acquisition. So I think it's a fantastic move for them.
They are an amazing company, right? And whatever Amazon does, they seem to do really, really well at. Jim, what do you think of that move by Amazon? You think that's going to help the price or not?
Well, I think it's going to be the revolution that has already taken place in the UK, which is the way people go to the store and the way they get their groceries and stuff like that. There's 3 companies over in the UK, Morrison, Ocado, and Tesco, that are already playing the game. And one of the stocks, Ocado, I think it's called, is soaring through the roof here in the last little bit because there's some talk that maybe a Walmart or somebody who wants to compete. They're an online supermarket, I guess, delivery system. And so, as far as I can see, they're going to change the way people go and get their groceries on a longer term basis. And these other people like Kroger and I guess it's Super Value or something like that. But Kroger and Walmart, they may have to make decisions on jumping on the new train. Because the new train already exists in the UK, so there is a model already for what everyone's thinking that Amazon is creating this new idea, but actually it's already existing and in force in Britain. So I would say that we're just going to see how the world is changing all the time, and how technology and what people want are going to be merging. Because once you know exactly what the consumer buys, then you put the data in, and now you can market to that consumer and advertise to the consumer. And that's, I think, where they think the revenue will be tremendous for Amazon, not only through sales but through advertising revenue, as people try to target these consumers like they do on Facebook, like they do on Google and other places like that. So I would say it's a revolutionary acquisition, and I would say that it's not setting a precedent because the UK already has it, and I would say that the other companies may want to figure out how they can jump on this train rather than seeing the train leave the station.
All right. You put some thought into that. You got a strong opinion. All right, Ron, what do you think of Walmart buying Whole Foods?
There we go. Now my screen's up. Yeah, so with Amazon going after Whole Foods, it was interesting to see how some of these retail stocks performed. Specifically Walmart, it's starting to rally off those lows. If you look at a chart of like Kroger, Kroger's just getting killed. Earnings announcement, and they got whacked again. But Walmart, before Amazon can go fight Walmart, a lot of stuff has to happen. So I was reading, I came across some headline. It was talking about, is this the death of Walmart? I think that was just to get people to open emails and clicks, and that's a far cry. But I agree with what everybody else said, that Walmart's probably going to have to do something in response. It's going to take Amazon some time to try to figure out exactly what they're going to do. But if I'm an Amazon shareholder, I'm pretty happy by that, because it just opens a new avenue of growth. And there's one thing that Wall Street likes: it's growth that cannot be counted, as if infinity was a real number. And as long as the growth prospects are there, in my opinion, for Amazon, who knows what's going to happen in 6 to 12 months. I mean, if a year goes by and Amazon's just pouring cash in and they can't make it, well, and that'll be negative. But from today's perspective, I think it's very bullish, for the stock. It's just a whole new avenue to try to generate some revenue.
All right. Thank you for that, for your opinion. I'm going to go ahead and share my screen, and I'm going to share a chart. I'm going to bring up Amazon. And so, I mentioned before, I'm a technical trader, and I have all kinds of opinions about Amazon from a fundamental standpoint. I think they're a great company. They're my go-to choice. If I'm going to go buy something, I go look there first rather than fight the store. Groceries are different though, and I heard the comment about success in the UK. And that may be regionally, particularly urban centers in the US, that may take off. I know Amazon had Amazon Fresh, and they've tried it, and I don't think that's exploded the way they want. It's been successful the way they want. There's something about going to the grocery store and picking out food and produce and stuff. So I'm a little bit skeptical from a fundamental standpoint. Although people at Amazon are smart, and they've done a couple of things I thought wouldn't work, and they absolutely did. So from a strategy standpoint, I'm kind of stand back and watch and see, and be willing to be amazed. I know it's interesting. Whole Foods had a real, almost cult following, and I'm curious how those customers are responding to it. I know Walmart, about the same time that Amazon announced the Whole Food announcement, Walmart announced, forget the name of the company, but it was a fairly upscale clothing brand that was targeting millennials, and they agreed to be acquired by Walmart, and those customers revolted. They threw a fit. They were like, "What are you doing? Right? You were supposed to be this socially responsible, super cool, hip company, and you got bought by Walmart, that's everything we're against." And those customers revolted, and now they got that to deal with. So I'm curious how Whole Foods customers are responding to the Amazon acquisition. I haven't heard anything about that. From a technical standpoint, and just looking at this daily chart of Amazon, and I just throw some really simple Elliott wave analysis and a Fibonacci retracement, right? Last week, when the fangs got bitten momentarily, we did have this pullback in Amazon. It did find some support at the Ichimoku cloud. I actually overlay Ichimoku cloud with Elliott wave, and what I say is, when East meets West, when you get two different trading systems that agree, that's a pretty powerful signal, right? So Amazon did pull back. It found support at the Ichimoku cloud. Long uptrend, and trees don't grow to the sky and stocks don't go up forever. Even a solid company with great growth prospects, right? There is a cycle of emotion that runs, and we could see a pullback, even if their acquisition strategy is brilliant and it plays out, right? We could still see this. We could still see Amazon retrace into what's known as an Elliott wave 4, down between 800 and the high 600s, or the midpoint here of about 750, call it. We could see that, and then what would be a wave 5, a continuation as that strategy played out over the next couple of years. But I'm watching this closely. This could just be a blip right here, but if we pivot off this previous high and head down to this cloud, there may be a wonderful short opportunity in the short term, through the rest of this year or something, a short-term shorting opportunity on Amazon. It's not presenting itself yet, but you can see it's losing momentum. We got a pretty significant low, so far a lower high. If it reverses down, there may be an entry. It would have to get down to about 911 before I'd be interested in it, and then look for a short down into this zone. Again, I'm a technical trader. I have opinions, and those news about Amazon and an acquisition, it'll bring my attention to the chart, but I'm going to make all my trading decisions based on price action, not based on even whether I think it's a good idea or not. I'm going to look at the collective response of the market to make my decisions about a particular trade. So I'm watching Amazon for a shorter term. It's not anywhere close to being ready yet. So those are my thoughts. All right. So the next portion of this show is where each of the participants shares a specific trading idea, something they're watching now or in now that you really like, kind of your favorite trade that you'd like to share with the folks watching the show. And we'll just loop back through our same order there to Larry. So Larry, what do you like right now?
Yeah, one thing that we like is NVIDIA. Back into that, we've got into this on a setup, a couple different trade setups on Friday. So, the thing I like about it is it's been in this, obviously, a really great uptrend. So it's one that, we'd like to trade, but had a big flush, big pullback, and again, kind of a retracement pullback into the major moving averages down here on the daily. I like to look at the 21 and the 8. So had a pullback there, held, and then we had a trend line break back up here, penetration through it on Friday and cleared it today. And so back into the 50% retracement area here on a daily. And if we hold this area here at 155, then the next target's right around 160, 162, then potentially back up. So I like that. And it's got some additional momentum. It's this one stock that doesn't quite get as affected by the overall broad markets either. So it kind of marches to its own tune. So a lot of different ways to to trade this either with some different butterflies and just our call debit spreads, etc. So I like NVIDIA. And I think we maybe lost Dean. So
No, I'm here. I think I'm good.
okay. Sorry,
I'm
Dean.
good.
Yeah. So I like
problem.
NVIDIA.
Okay, long on NVIDIA. Very good. Okay, Jim, what do you like? What would you
Well,
share?
again, yeah, I'm not with the option professor. We're not going to give you a specific trading idea, but what we do try to do is maybe have you focus on certain strategies based on where the markets are and what might come in handy if you have certain opinions. So with the market, let's say on a general number between 2450 and 2500 on the S&P, and with some seasonal situation coming up in July, August, and September that some people may believe is not the strongest period, and with the overbought condition versus the price and the 200-day or the monthly long-term moving averages, and finally the low VIX of 7 or 8 times underneath 10 in the last month, 3 strategies might be worthwhile investigating. One would be the collar strategy, where one might try to take advantage of call premiums and then use the premium to buy puts and basically bracket the value of their position. The second strategy might be a married put, where you basically just take advantage of low premium and buy some insurance in the event that we do get a pullback, because as you saw with the FANG stocks, it can be fast and furious, and by the time you figure out what you want to do, it may have already gone so fast. And so a married put might not be worth investigating. And then finally, for those speculators who want to have limited risk, but also want to have potential on either side, with the VIX at these levels, the strangle type strategy on one of the stock indexes might be worthwhile to investigate, because there you'd have both sides positioned and you'd have limited risk. And then, of course, if that VIX were to jump up or spike up, you might get enough action on one side or the other to obviously make it a very worthwhile situation, particularly if the pullback, if it were to occur, was from the Fast and Furious movies, you know, where it happens fast and you don't really have a whole lot of time to fool around with strike prices, expiration dates, and figuring out what you want to do. So those are the 3 things that I would focus on as far as learning more. That would be, again, the collar position and the married puts, which are hedging type positions. And then, of course, the strangle type position, if you thought that volatility may pick up significantly in either direction in the weeks and months ahead.
All right, thanks, Jim. That's some interesting stuff to think about, and you know. I know you're not an advisory, so you're providing option training, so appreciate those ideas. All right. Well, I like right now my probably the favorite trade I'd like to share with folks watching would be a technology stock, and I think tech, when we saw that pullback, a handful of days ago, tech's run up, and there's maybe some thought that it's at the top or near the top. But what I'm showing here is Seagate technology. I think we got a nice short setting up here on Seagate. And I said I use a very simple form of Elliott wave. And, there's lots of complicated discussion and material and patterns and sub-patterns. I looked at one chart for Elliott wave. There's 144 permutations to measure. Well, that's ridiculous. I look for 3 setups, and I just look for the big waves. And on this Seagate chart, here's the big waves, right? Big impulsive move down, that's 3. There was a perfect correction into the Fibonacci retracement zone, that's 4. And after you get 3, 4, if you get evidence of the thing turning again, down in this case, it's a bearish chart, right? We got lower lows, lower highs, lower lows, lower highs. We're under the Fibonacci cloud. Well, it looks like wave 5 starting, and I can measure where that would be expected to go using Fibonacci extension lines. We got a target for Seagate under 2079, and it's showing every sign of really heading that way with growing bearish momentum. So we got an entry here at 4106, currently got a stop at 4498, and we got a target down here. The target's 2047. right at the top of this Fibonacci retracement zone. So this stuff actually works, right? There's no guarantee. There's no free lunch on Wall Street. Every trade has the potential of failing. When we get a clear setup like this, a pretty high percentage of the time they end up working out. There's one that has a very similar pattern that we're pretty deep into this trade. This is PAGP. You can see this looks very similar. Big impulsive move down, a correction up into the Fibonacci retracement zone, wave 5 getting underway. And I have to increase the scale to see how dramatic this is. Because we got into this thing at 3176, about the same point we were getting into Seagate in terms of where it's at in the wave count, right? And we're down here at, now we got in 3176. This thing's sitting here at 2468. We are in what? PAGP, yeah, 30% profit on that trade so far. And it's got a long way to go down to the target zone, clear down to 1619. And it's just marching like a soldier, very orderly market all the way down there. So STX is a trade I really like right now for a short. Seagate Technology, and I think it's got a good reward to risk on the trade. That's something I look for. And I measure that from our entry to our stop. So I never take a trade. I have an entry, a stop, and a target before we take a trade. Well defined based on price action. They're not arbitrarily set on percent loss or anything like that. It's set on, again, we use higher highs, higher lows, higher highs, higher lows. So a particular higher high or lower high, get it right, lower high, which is a significant resistance level, right? So we look at the stop and the entry, and the distance from the stop to the entry, that's your risk. And then the distance from the entry to the target is your potential reward. And you can see this is 5 or 6 times reward to risk. That's what I like in a trade. So some trades are going to fail. I want to have a very small loser relative to the ones that win. And if you have big winners, losers, you can be a 50% trader and wildly profitable. It takes a lot of profit off, a lot of pressure off. You don't have to worry about, every trade winning if you got a really high payout ratio, the ratio of your wins to your losses, the dollar amount. So that's what we shoot for. High return potential trades, right? And then manage risk. And if they do fail, we take a very small loss and move on to the next one. So that's what I like, Seagate Technologies. All right, well, we're going to go one more time around the room here. And this would be if you have any closing thoughts just on the market, on trades in general, and then anything you'd like to let the folks watching the show know about your service, or if there's an offer or a link or a newsletter or something you'd like to have them sign up for, this would be the time to share that. So one more time to you, Larry.
Okay, well, thanks, Dean, and thanks again, Dave, for having me here today. Yeah, so come visit us at powercycletrading.com. It's right here's the website. Just come check us out. We've got a lot to offer, a lot of different trading courses, technical trading indicators, just a lot of good stuff, and a lot of years of experience of teaching now and trading. So come visit us, powercycletrading.com. So thanks again for having me.
Oh, I'm trying to get back now. I lost my, there it is. Okay. Jim, any closing thoughts there for the folks watching the show?
Well, I just wanted to invite them to learn more about how the Option Professor DVDs might be able to give them a hand understanding the universe of all the different strategies that are out there in options, which obviously there's a lot of moving parts in options, and understanding the use and the risk of each tactic is very helpful. And since we are in this region here where some people might think that some of these Fibonacci numbers may hold the market up a little bit, or maybe the seasons that are coming up, the seasonal months that are sometimes not so strong, and the VIX being so stubbornly low, we might be entering into a situation where hedging strategies or taking advantage of strangle type strategies might be worthwhile to have a good understanding of. So I'll invite people who want to learn more and get educated on this to shoot us an email at optionprofessor@gmail.com. and then we'd be more than happy to respond to that and give you some details on how you could become more educated. And look forward to hearing from people.
All right. Thank you, Jim. And Ron, any closing thoughts you'd like to share?
Yeah, hey Dean. Just really quickly, I just wanted to go over as well, and I'll do that for like a 2-for-1. Right. Gang, what I want to show with you is what we've done here at Financial. And we were talking about, I love technical analysis too, and we also talked about how the S&P, the markets in general, they really crash historically, but net, it doesn't go anywhere. So if I'm in financial and I want to try to see where the S&P might be headed based on its historical data using the seasonality part, you know, just look like out over the next 12 weeks, which is about 3 months in time. And what you end up seeing is the S&P basically goes up 0.1. That's 0.1%. In 14, there's a 58% chance based on historical data that the S&P based a 0.1%. And then if you go out, for example, it doesn't get much better. It doesn't get better until we get back into our market typically for trading ideas. What we're so proud of at Financial that we've built is we can actually come in here instead of trading the S&P, hypothetically being long, which is what a lot of fun manning this summer because the S&P vertically, I can actually come into our seasonality screener and say over the next 12 weeks and get a list of the hottest stocks for the next 12 weeks. Not that Ron, me, is saying they're going to go up, but based on their own historical data. And what I love to do is just come down here and write down a couple symbols, you know, microchip. And then if I want to look for maybe 13 weeks or 14 weeks, we'll see stocks like Celgene. So instead of riding the S&P to nowhere fast, I can come here, pick out the best performers, bullish or bearish, and try to go, you know, focus my time and attention on them with proven track records. So using Celgene as an example, 13 weeks, it goes up 12% on average. So what we can do next is just go into search, go into seasonality, and if I type in Celgene, and I move this cursor, I can actually see, this is also very cool, I can actually see which week I might want to trade for that period of time. And then if I keep an eye on the accuracy rate, historically, for example, 75% of the time, historically, this stock has gone up. So in 22 out of 29 years, this stock has risen by 70% by an average of 12.2%. Now, what's really interesting is this is the trade idea I wanted to bring to you today. Seen Celgene, but holy moly, it's already rocking today. And it's been actually starting to go up, and the volume here has been pretty nice too. This thing's already running. But even if I subtract out today's roughly 0.5% move, on average, there's still around 10% historically left in the tank. And as you can see, Celgene's getting above different moving averages. So if I wanted to try a trade idea, I could consider a long stock. Bull puts, credit spreads. I love credit spreads, especially with seasonal stocks that actually trend positive. I think it only increases my chances. I could consider long calls. And if I look out, let's say 13 weeks, which is about 3 months, I could go out and buy, for example, a 6-month option maybe, right near the money, and then look for this to play out. And then for a trailing stop, I just go with the red line, which is a 20-day exponential moving average, and just let it run. You know, one of my favorite ones that we talked about previously is Disney's a rock star, an absolute rock star in Q3, when Q3 ends and Q4 begins. And just to show you how simplistic this is, you just follow the red line. And if my chart would actually, there it is. There's the red line. And when it gets below, we stop ourselves out. So we like to teach a financial is very simple. Hey, let's cut our time down. Let's look for some high probability trade ideas and then use a very simple exit system. And we tell everybody to follow along on paper because it's free. and you get to learn for free. So what we did for everybody here listening today is I have a free trial. There's no credit card required. We could never charge you if we wanted to. So when I was chatting with David, he wanted something special and unique. If we could do it, I said absolutely. If you guys go to financial.com/timing, you can just type that in. You get a free 14-day trial, never be billed a dime. And I'm going to be holding a live session for everybody where you can come in, play around with it, that signs up for the trial and ask questions on the spot. So thank you guys so much for having me, David, Dean, and everybody. It was great to be part of this. Thank you.
All right. Hey, thanks, Ron. That actually is really interesting. I'm intrigued by that. The notion of, seasonality and probability. And, if you were to overlay that with maybe another technical system and see if they agree, that would be pretty cool.
I completely agree.
Yeah.
You bet.
Yeah. So thanks. It was good to meet you. I was glad to be on the panel with you here. So again, I'm Dean Jenkins from followmetrades.com, and I've got a website. Here it is, followmetrades.com. And what I'd offer, we got a pretty good track record here. You can check out year over year that we're blowing away the indexes. We're not making any claims that anybody's going to, turn $500 into $5 million. But we're looking for solid gains and consistent gains in trading, so we're doing pretty well. And a good way to get started is just sign up for the free newsletter. Every week I publish a market newsletter where I give my updates and predictions on what's going on in the market. And so I'd encourage folks, if they're interested, to check out the newsletter and get signed up and see if you like what we're doing here. Well, hey, good show. I appreciated being here. Again, David, thanks for inviting me back. And Ron, Larry, Jim, it was good to hear your opinions and to have some dialogue and discussion. So thank you. And David, we'll go ahead and turn it back to you.
All right. Thanks, everyone. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button to get updates on future shows if you haven't done that yet. Also, for the next few weeks, we'll be back as normal on June 26th, but then we will be off a week for July 3rd, and then back on July 10th. So just want to thank all my guests again for this week. Ron Haydt of Financial.com, Larry Gaines of PowerCycleTrading.com, Jim Kenney of OptionProfessor.com, and Dean Jenkins of FollowMeTrades.com. Thanks, guys.
Thanks, David.